Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Dennis Dick, and we have Kenny Glick on the line. He is the owner and creator of HitTheBid.com. Kenny, were you out there hitting bids yesterday?
Yes, yes, I was. And finally, my name of my website, it means something again. I'm very excited about the environment that we're in. Good morning.
You're now, come on. You can't be excited about the environment that we're in. I mean, people are losing their investment dollars. Come on, it's a bull market. The market's always supposed to go up.
Wah, 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 wah. No, this is the reason I became a trader. Back in the day, I thought, the market generally does go up, so you can invest in stocks and sit back and relax. And then when I started learning about day trading, back in 94, 95, 97, I thought what a great idea it would be to have a portfolio and then try to short stock that you own to make some money on the down days. And I was always a shorter, so I love market environments like this. Yesterday was a little bit extreme. The rational thought in me took over, and I took profits at around 10:30, and I missed a large portion of that sell-off. But still, I'm going to be taking the unpopular view of the market today and say, be afraid. Be afraid. I am not looking to buy a dip right now. And as you know, the first guys that stepped in yesterday are probably feeling some pain right now, the first buy on dippers.
Right, and I can see that mentality where you have, after getting some profits in your shorts because this market. Until yesterday, there'd been a trading range and a very well-defined trading range, and it's kind of hard that to say, okay, this is going to be the day where we finally violate the bottom of the trading range. A lot of people that are stuck here. You had a lot of support in the S&P futures here in the mid 2040s. Now that's given way. Are you going to try and be patient and wait for a pop? You think we can get a nice relief rally to short into, or do you think this is going to be one of those circumstances where you just got to go into the blood, get red, and if it pops again on you, short more?
It's a great question. What I was hoping for today, and obviously on Wall Street you really don't get what you hope for. I was looking for a market to kind of sucker everybody in on the long side with a gap up and only to fade that gap and then roll over and really get red again today. But now that we're gapped down, I'm really never a big fan of trading the direction of the gap in the morning. So I'm going to be sitting back and watching the VIX. Now the VIX has come back to life. I was talking about how I was shorting that UVXY for a while. And that product is still a terrible product, but as long as that's staying green and trending up, I'm really not going to be looking to play, anything on the long side. The way I've looked at this market, and basically since Alibaba, and I'll talk about Alibaba in a bit. I think that stock represented all that was wrong with Wall Street. And ever since October, I've been pretty much on the sidelines. I've never committed too much more cash to the market. So this right now, what we're in right now is sort of the day of reckoning that I've been waiting for. But if you look at it, where are we really? We just gave back maybe a month's worth of work. We spiked up on the QQQ, and I'm more of a techie guy. I watch the Qs and the NQ futures. So where are we really? We're just basically back from where we were a month ago. If we start going down from here, that's when people are going to start saying, maybe there is something to this sell-off. And I've got 103.95 as an area of support. So we still got 2 more points to go on the QQQ before I would even be afraid that this market could go down more. So I think there's going to be more selling. I'm not looking to buy anything. And this market, it's been in a stealth correction for months. Take a look at GMCR and LinkedIn. And, considering the market was only held together by Netflix, Google, and basically Amazon, I figured one of these days we're just going to realize, hey, wait, if we don't need anything but content on Netflix, maybe the market's not as strong as everybody's, thinks it is. And this is what we get.
I could. We just got something coming here out of the chat from Nick here, Nick Donato. Can we look at the technicals for Best Buy over the last 6 months? Is it me, or is there an obvious buy with the new gaming consoles coming out and the holiday season approaching? Any thoughts on Best Buy?
Oh man, it's going to be hard for me to take a bullish stance on any stock, and I'm not even joking around. And Best Buy, the joke of that company was that it was just a showroom for Amazon, as we called it back in 2-3 years ago. And then out of the depths it came to rise back into the 40s, this stock looks like it's disintegrating again, and it's a nice downward channel. I wouldn't be looking to buy this stock unless it tested that 30.45 again, and then breaks that 30.45, you'd be able to pick the stock up at $28. I would not be buying it. And you're gonna have a hard time telling me to buy a stock today, no matter what this chart looks like. If I had to find a stock, again, you guys got to tell you laughing when I mention this one, but Alcoa, it's about 30 cents away from buying it. I'll tell you, I was on the show with you guys years ago, and I was loving Alcoa. 15, 17, looked like we were on our way to 20. I never dreamed I'd be able to buy this stock again at 8.85, where I originally picked it up. So I'm sitting there licking my chops for some Alcoa. I know the commodities are the worst stocks to buy, but this stock is, down at 8.85. You got about $1 of risk for maybe a 3-point gain if you're a 3-point gain if you're a long-term investor.
Yeah, that was a while. I can pinpoint when that was because that's when X went to $40. Remember that?
So, oh
Yeah.
God, do I?
What was this? I even have to go to the monthlies on this one. When did we hit? Oh yeah, it must have been at the end of 2014 when we have you on, and that thing got up over $40 and just had a bunch of upgrades. Everyone was looking for go back to all time highs. Any thoughts on X here? I mean, now that you're looking at the Alcoa, the X here trading down in the pre-market. Wow, trading down 83. Is that right? No, 68 cents here. Any thoughts on X?
Yeah, it's right there next to the next one that I'm looking to buy. These two stocks, I mean, these are those just awful stocks, but they've led the charge to the downside. So I'm thinking maybe, when we get this washout across the board on the market, maybe these real garbage Alcoas and US Steel, you'll get your 10%, 20% pop pretty quickly, coming off extreme lows. I mean, like I said, if you could buy Alcoa at $8.50 or $7.85, and now it can only, if it just pops back to nine and change, that's a great investment. Same thing goes for U.S. Steel. And again, I'm going to wait till it tests that low around 15.70, and if it breaks that, we're looking 13.85, which is unbelievable because we were high-fiving each other, ready to sell this thing at 50, which seems like a heartbeat ago. So being able to buy it at 13 and change, I'm probably going to dip in there as well. And, another garbage stock that, I'm kind of sniffing around is the RIG, R-I-G.
Oh, Rig, the pig and Rig. What are you thinking about this one? Oh, this one's
Oy
holding
vey.
on. Oy vey. It's holding. What here? It's not going to double digits yet here, but boy, this stock's having a hard time at 14. What are you seeing in Rig?
Same kind of scenario. I'd like to see it test that low print again, that low 12 area. And if it can hang in there, maybe I start building position. But, this one's a little bit more scary because I think oil, with everybody trying to pick the bottom, that means that the bottom is not in. Everyone's talking about this is it. No, I'm never going to venture out there and try to pick the bottom of oil. If I believe the markets are manipulated, the stock market, I mean, my God, the oil market is the most manipulated market of them all. So, but with RIG, again, it's all going to come down to technicals. And also, I know you guys are talking about dividend-paying stock. I think the dividend in RIG must be like 50% now, right? Was it at 2%, 3% when the stock was $30? So at $12, the dividend's got to be ridiculous there.
They cut it,
But,
though. They cut the dividend there on us there back, and I think it was around $25. They cut it down. They cut it in half. It's 4.58%. It is climbing again, though, even despite cutting the dividend here. So,
right. Yeah. I mean, and again, as much as I say I'm going to dip into some of these stocks, I'm really looking for some carnage in the market. I'm looking for finally the buy on dippers get smacked in the mouth.
They
And
deserve it,
that's
to
what
be honest. And not to be mean, but it's been this buy on dip has worked for 5 years here, and we were talking about it on the show for the last couple of years. I'm like, when are these guys going to start to actually this trade not to work? And maybe finally, this is the reckoning day. Maybe the buy the dip actually might not work on something. But you're looking for more carnage here, Kenny. Which stocks are you looking for the carnage in?
well, a lot of the names that I was waiting for to get beat up got beat up yesterday. The Netflix. I mean, how much content do we need? I mean, that's really the only stock that was worth buying. It seems for the last 2 or 3 months. Most of the stocks, sadly, the bulk of the money on the short side has been made. I think GMCR is still going down. I think, and again, I wanted to talk about Alibaba and how that stock insults me as an American. How the powers that be, let's call it CNBC, if you will, or whoever, they led us to believe that this was the next Google. This was the next. You needed to be in Alibaba as a cornerstone of your portfolio. And all I knew about Alibaba from 3 or 4 years ago is, I'll make a long story short. I was in the Apple store. I was going to buy a cable that cost $29.99. The little Apple genius kid with the, he said, "Hey, buddy, I'm going to tell you something. There's a website called Alibaba. You can buy cables for $2 that we charge $30 for, and you could you get your wife or your girlfriend a nice fake Gucci bag." I did it for my girlfriend, and I said, "What the hell is Alibaba?" And well, first of all, I said, "Kid, my wife could pick out a fake Gucci bag a mile away, but I like the idea." So I'm on Alibaba buying a $2 cable, and I was about to spend $30 for. And then a year later on, I'm hearing about this company going public, and I'm like, wait a minute, this is the same Alibaba that this little kid was telling me about. They sell counterfeit products, and suddenly it's the greatest IPO ever. We're heralding Jack Ma as the new American hero. He's gonna be on a postage stamp, and then suddenly the stock starts going down. Next thing you know, we're hearing about that they sell counterfeit goods, but this little schmo in the Apple store 3 years ago knew about it. How are you going to tell me that the analysts and the investment bankers didn't know they were selling counterfeit products? So to me, again, when that stock hits $20, that's when I'll be excited. So I bought some puts on Alibaba. Even though the stock has gotten hammered already, I'm rooting for it. I'm rooting for the demise of that stock, and I can't wait for the book to come out, the new Enron. It'll be Alibaba, because this stock is an insult to all of us. Remember, people, China is still communist.
Okay, wow. I think we might have to cut that clip out there. That was pretty good. You mentioned Netflix there. We had a guest on a couple days ago that was talking about the 300 PE. I believe that was Phil Davis of Phil's Stock World. Further downside here for Netflix? I mean, just short into that big red candle. Is that what you're looking at? You got any downside objectives?
Well, the thing with Netflix is this one, you missed that beautiful double top there, obviously at 130. So, like you were saying, are you going to wait for something to pop up before the short? Netflix, I would definitely have to wait it out, But if we do roll over, there is that gap down to, 102.40 is what I think the stock could get down to. And that could happen today. So, I mean, it's another 5 points. I'm not going to risk any money short in Netflix here, because Netflix, like Apple used to be and how Tesla is, they're Teflon stocks. They don't want to go down. So why would you mess with that? I'd rather short a stock like an Alibaba or a Green Mountain that looks like they are done. I mean, Green Mountain, I'm a big fan of the K-Cup, but, I don't know if you ever read the story about the microbes living inside your Keurig machine, and that was when the stock was 111, and Coke made this big announcement that they're going to invest in Green Mountain. So I guess smart people and CEOs can make mistakes also, because they were loving it at 130. Coke, you got to love it here at $50 cost average.
All right. Just one final question for you here. Just your general strategies here. You talk about stocks, and then you also talk about going to the options markets. For me, in some situations, especially a stock like Netflix or a Tesla or something like that, for me, I go into an option, I buy a put, I know what I'm risking here, and, I can put it on the line, add more, or take it off. Is that the kind of way you approach it with some of these? If you have a longer term opinion on, instead of going into the common, lock locking up your margin? Is that the way you make use of the options markets?
Absolutely, especially with what my plan is for Alcoa. Considering I'm going to be looking probably at least a year and a half, 2 years out for that. If the stock gets down to, let's say, 750, you're going to be able to buy $10 leaps for probably 80 cents. So if this stock could just get back to $9 or $10 within 2 or 3 or 4 months, your leaps are going to be, a 20 or 30, maybe even a 50% gainer. So, when I start dipping back into this market, whenever that time comes, I'm probably going to start looking at some leaps. But as far as options are concerned, generally today, if anything, I'm going to be just looking at, the expiration. I'll be playing the stock, the options just to get some leverage on the day. And again, if this market starts to reverse, all my bearishness will be dissipated in the matter of a moment. Again, being a trader, I will trade what's happening. I'm not going to, just because I'm feeling bearish isn't going to be,
right.
How I react on a day. But yeah, I'm going to be looking at some leaps, U.S. Steel, Alcoa, to name a few. Just to name another stock that I really, really don't like is the Fitbit. This is another joke of a company where you're going to be able to buy these watches probably in a bubblegum machine 2 or 3 years from now. There's going to be a company in China spitting these bad boys out for that cost a quarter, and this company is going to be worthless.
Okay,
so,
we've been
exactly. You'll be buying fake Fitbit watches on Alibaba. Exactly my premise.
Okay, Kenny Glick, owner and creator of HitTheBid.com. As you can tell, he used to be a stand-up comic, giving us great commentary on the market. Kenny, we're going to have to get you on again soon. A great commentary, and good luck trade today. We'll speak to you soon.
All right, good talking to you guys. Thanks for having me on. I love it.
Thanks, Kenny.